Good morning and welcome back to Almus Market Mornings. The latest in the Iran-US war is that the ceasefire extended. President Trump has announced. Looks like it is being extended till the time there is a new proposal from Iran. It also seems the peace talks didn't happen yesterday because no one came from the Iranian side. Generally, markets have not reacted significantly to these updates and remain well within the ranges. Good morning, JK. I think it seems a waiting game is being played. What do you think would be the key movers up ahead?
Hi, good morning, Swaraj. It's a kind of stalemate that we are seeing, and only positive aspect is that the ceasefire has been extended by president, which means that there will be no immediate attacks, and but at the same time, neither the Iranian team nor the US team have reached Pakistan, where the second round of talks on peace process were supposed to start. And Iran has actually informed US through Pakistan that it will not attend the talks. And, really they consider there is clearly no clear outlook for diplomatic contacts with Washington. They also noted that US had violated its commitments after previously accepting their 10-point plan, which was the basis for negotiations. Washington also had put forward excessive demands in the in the view of Iran, which they cannot comply with. So there is a stalemate. So what we should look forward to is that these differences and also the unmatchable expectations need to be addressed first before they really get into talk. So I think this is going to be a long drawn process. So ceasefire is only cessation of attacks, and of course, both sides keep their options open. Important thing for the markets is that the US blockade of ships continue, and Iranian closure of the Strait of Hormuz also continues, which means that we have the mm, no oil supply chain issues continuing, and that is not a good thing for global economy, because now if these stalemates continue beyond May, or even beyond April also, I think the challenges will start to increase for the global economy, particularly for the oil importing countries, and they will have to contend with not just inflation, but also growth slowdown, activity slowdown in businesses. So that's what the markets are trying to price in currently. So we watch the developments. Hopefully, we do have some progress in the coming days. In the meantime, there's been some update on the US economy. March retail sales printed a very strong 1.7% headline versus 1.4% that was forecast, and this is the strongest number since January 23. The control group, which also feeds directly into the GDP calculation, also jumped 0.7% versus 0.2% forecast. However, the retail sales number were significantly boosted by higher gasoline prices. So we actually have nominal GDP going up, but the real GDP, which if we don't consider the inflation number, then it's actually only 0.6% higher. And so this is the risk is that if the gasoline prices stay high or moves up even more, then it could actually affect the general consumption. So nothing major to take forward from the retail sales, except that it has been holding up so far. But I think again, it's related to how the war proceeds and the crude oil prices behave in the in the coming days. Meantime, the hearing for appointment of Kevin Warsh as to succeed Powell for the Fed chair was done yesterday. The new nominee has expressed a new approach for controlling inflation and also the communication overall. Basically, he's saying that excessive communication could actually constrain Fed from acting in accordance with the evolving situation. So there could be some shift in the way the Fed operates, not necessarily the way they address the inflation aspects and all that. So that is something that the market will be looking ahead to from the next meeting onwards, after May. So when Powell steps down. And interestingly, even President Trump also stated on Tuesday that he is in favor of raising interest rates to stop inflation. This is the contrary to his constant tone that he wants the rates to be cut. Always he has been critical of Federal Reserve for not cutting the rates, and again, this stance could once again shift in the coming days. So that's something that we should be aware of. On the dollar side, we did have some recovery from around 98, low 98s, but that's again well within the range. No major shift in the dollars range, and this is likely to continue until we have a resolution on the war side, or we have more clues on the monetary policy going forward as well. So the dollar, I think, has a definite negative bias, but for the time being, there's some amount of short covering has been seen because of the geopolitical stalemate, as well as the economic data coming somewhat stronger. In fact, significant move was seen in gold, which slid further towards $4,675 per ounce because of selling by some central banks. The Russia and Turkish names have been mentioned here. And these central banks have been selling due to fiscal pressures in the domestic economy. But at the same time, the other central banks have been a buyer on dip. So we are held in the range between 4,500 to 4,900 broadly. I think as the yields also stay higher, and market's positioning is not is still on the longer side for gold, particularly the speculative market. So we should expect the gold to still remain in the range until some new strong development on the economy or the war front emerges. As far as the rupee is concerned, we had seen swift weakening towards 93.50 yesterday. And this move, of course, has started with the strong import buying, which was seen on Monday as well. The recent RBI's relaxation for clients to be offered even non-deliverable market hedges, as well as the relaxation on rebooking of cancelled contracts. These have also actually given some boost to client hedging activity. The import hedging has been on the rising side, with as is also indicated by the forward premiums, which have jumped by about 10 basis points for a 1 year tenor. So I think these global developments, as well as the fact that the rupee could not break 90 to 50, even with the stringent RBI regulations on positioning on and their measures against speculation. Actually, this not breaking 90 to 50 has also given more impetus for importers to come and hedge. And another factor to note is that while last week we had kind of neutral approach from FIs, the flow being a very tiny inflow, but this week we are again seeing some modest outflows only restarting. Even as the markets have reached good recovery of about 10% from the lows. So I think that is something again to be watched. So overall, the pressure on the rupee is not easing, and we are likely to see that continue so long as the global situation does not ease, and the import demand is likely to sustain. And despite the fact that PSO oil companies' demand is not coming into the market, only thing we will see is that if move towards 94, probably we will see a strong round of intervention from central bank, whose reserves have now once again crossed 700 billion, and perhaps there could be more regulative or anti-speculative measures that can be contemplated by RBI, or some measures to improve the supply also can be implemented if it starts to weaken again towards 94 and beyond. So for the moment, the weakness is sustained, and we'll see where the resistance comes for the USD INR. Thank you.
Thank you, JK. And yeah, the old pressures of rupee again taking charge after all the regulatory or the directive related moves clears out. We saw 92 half as a good pace, and now the weakness because of the underlying theme, oil prices, lack of capital flows are driving the rupee. Otherwise, markets generally remain in a range. The stalemate which is happening uh, is something of concern because US has blocked Iranian ships and Iranian side has kept the strait closed, which isn't good for energy prices. It impacts a lot of Asian countries. So that this particular narrative will be closely watched. Nothing major to take away from yesterday's retail sales. It looks like US economy is holding up. And yeah, that's about it. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.